9 a.m. in Shanghai, Shenzhen, and here in Hong Kong, you're watching The China Show. I'm Yvonne Man with David Ingles.
Good morning. We are counting down to the open of markets in Greater China. Our top stories today.
The threat of criminal charges is a consequence of the Federal Reserve setting interest rates based on our best assessment of what will serve the public, rather than following the preferences of the president. This is about whether the Fed will be able to continue to set interest rates based on evidence and economic conditions, or whether instead monetary policy will be directed by political pressure or intimidation.
Fed Chair Jay Powell, they're accusing the Justice Department of pressuring the central bank to lower interest rates. The dollar is down against almost everything at this point. Prosecutors are launching a criminal investigation tied to the renovation of its Washington headquarters.
Meanwhile, President Trump says he's considering options for Iran as Tehran attempts to quell protests that reportedly left hundreds of people dead.
Oil and precious metals in focus as the geopolitical turmoil threatens the stability of a supply from one of OPEC's top producers. We look at the impacts on its biggest customer, China. Good Monday morning. What weekend? So going into the session today, there's a ton of developing, potentially globally consequential market stories to tell you about. Number one is what's happening in Iran, and we are getting some comments coming through out of the U.S. president. Number two, we'll get to this in a moment. You just heard from Jay Powell there, which is leading to this massive decline we're seeing in the U.S. dollar, the massive bid we're seeing precious metals catch right now, 5% on silver, 2.3%, 4,600 now on gold futures, as you can see on your screens. The equity market overlay of all of this, and just keep in mind Japan is shut, cash markets are shut. There is also the Japanese component of reports of a possible early elections. We can get to that. It certainly is more domestically focused, but when you look at where the yen is trading, certainly it's something for investors to watch. Bloomberg Dollar Index down on your screens. We are bid across equity markets. S&P futures, though, are reversing some of the gains that we had going into the weekend. Taiwan coming online 1% to the upside. Very, very quickly, a look at Japan. Of course, we talked about that. I was about to say the yen was trading at the weakest level in about a year or so, but then the DOJ and the Fed story happened, and now we've reversed that completely, and then some more. Dollar yen is now back to 157. Euro yen trading on the fence, but yeah, substantial move up in Nikkei futures right now. 54,000 is the level to track, and the approach to the open today, looking at oil prices in Shanghai on your screens, 2.8%, and a very strong Chinese currency going into the Monday session.
Needless to say, our producers have been kind of working around a rundown. If we're trying to form it as we speak.
What rundown?
What rundown? We're ripping the script really here, just given the news flow from this Monday morning, right? So we thought we were going to be talking about a Supreme Court decision on tariffs. We thought we were going to be talking about Japan, but look at now. We're talking about Fed independence. And, of course, the oil situation around Iran.
Yeah, not to mention the jobs report, which is, is of less consequence right now.
Not really.
Yeah, given everything that's happened as well, right? So so three stories, right? There's the oil story where if you look at the Venezuela angle from last week, certainly more consequential from an oil producer swing factor perspective, right?
Fourth largest producer in OPEC.
Fourth largest producer, I think third largest in terms of spare capacity. The dollar component suddenly shoved in our faces right now on the Fed story.
Yeah.
Right? So we were looking at the big news on the weekend. So you have Iran and then you had Japan. Going into today, a very weak Japanese currency. And then the Fed story suddenly dropped on the terminals. And then you have the dollar reversing everything. It's now weaker against most major peers.
You're sort of entering uncharted territory when it comes to the Fed, right? With these criminal charges that are being brought forward here. And Powell has signaled in a way, it seems like it's a push from the government to really lower interest rates, right? And does that mean we're going to get a new Fed chair much sooner than what markets are anticipating here? And does that have more implications for the dollar, as you say, yield curves as well, and maybe even more of that haven bet when it comes to precious metals?
Yeah, I mean, all of these things, to your point, right? All of these things do point to the need and sort of rationalize these flows we're getting into precious metals.
Yeah.
Right? So 81, 82 on silver. It continues, whether or not you believe the de-dollarization story, the debasement story, the flight to havens because of what's taking place in the Middle East, it's understandable you're getting the strongest bid right now across precious metals.
Yeah, and then I think even when it comes to what the U.S. is going to do with Iran, right, that's sort of the next sign to watch here. When you talk about what President Trump has said over the weekend, that, they're ready to hit hard if Iran continues to go and quell protests and the like. And so the options, and towards what we've been hearing from our sources of what the president and the U.S. might be considering when it comes to the response to Iran, that certainly is what we're watching very closely here this morning. So certainly there's a lot of talk about geopolitics, economics, and the like here. Let's bring in Jean Chia, Global Chief Investment Officer at Bank of Singapore. Perfect timing to really have you here, Jean, to tell us a bit more about what your outlook for 2026 is. It seems like geopolitics is really much front and center now.
So what a time to be here,
yes,
David and Yvonne. I think the base case we had come up with, even from the start of the year, and indeed for most part of last year, is that increased noise level in terms of geopolitics, and to the extent that that actually impacts the economic world order as well. So geoeconomics has become a front and center, no longer an idiosyncratic phenomenon, but just part of the necessary noise that we're going to encounter for the most part of this year. Now, what we of course did not expect is the space and time and the time frame that this all happened within the first week of January. But I think more importantly, how we positioned in anticipation of such changes, dramatic changes in terms of the world order, is indeed what you mentioned as well, the allocation in our portfolios towards gold, for example, and precious metals on the one hand, but also factoring in that the geopolitical tensions do feed into the US dollar weakness that we are expecting more from a strategic and sort of structural standpoint as well.
What isn't clear, I want to get more on your gold comment in a moment, but when you look at the top news has really been geopolitical, right? And no pun intended, we are entering new territory on some fronts. But the backdrop is the global economy seems to be resilient and doing okay. And I wonder whether that affects, even on the margin, your appetite for risk assets and what 2026 might be like in terms of risk assets.
Very good question. And it's ironic that in an environment like this, we actually started the year with a risk-on stance in terms of our asset allocation.
Okay.
So why is that so? We believe that what's very supportive in terms of the outlook, at least on the markets, is really the lower interest rate environment. And be it as it may, whatever form that comes about, the pace as well as now questions over, whether the extent to which the White House has influence over the Fed's decision, the fundamentals of the economy remain relatively strong. Now, to the extent that how strong is it and what's the impact on the U.S. consumer is another topic to be discussed. But at least on the headline numbers, growth appears to be intact. And that actually is a very supportive backdrop, along with the weak dollar for U.S. corporates in general, but also for business environment overall. So that actually gives us that confidence that its risk assets do actually stand in a good position for the most part of this year. However, I think the dynamics have changed dramatically. And our overweight is not on the US, but on Asia ex-Japan. So in terms of asset allocation, we're also nuancing the view with being very specific on the areas that we are more positive on versus the general market.
Is it just a valuation story when it comes to Asia equities, where compared to the U.S. it still looks relatively cheap, and that maybe there is still more to go in this whole AI trade? Or do you see some sort of cyclical sort of factor here where growth is doing quite well in this part of the world as well?
So there are two parts to this, and it actually links to the New World Order to some extent. So first of all, in terms of the AI race, I think we're starting to see a bifurcation in terms of the pace as well as the nature of development in AI. And while we remain very committed to the AI trade, I think the way that we get exposure to AI is no longer in the upstream segment, which is, the Mag 7 0 to 1 development in the US, but more now the AI proliferation and AI applications, which is the 1 to 100 that Asian as well as China development is taking us. So broadening that trade on the AI theme is one dynamic that, from a thematic standpoint. And valuations remain relatively attractive vis-a-vis global equities. And so we believe that Asia ex-Japan still has that support, the valuation support. And finally, I think the New World Order also means that capital allocation may start to shift. I mean, traditionally, where we've always talked about that the US is not the only game in town anymore, but remains very concentrated in most portfolios as an overweight for the several years now. So to the extent that at the margin, if there's allocation into Asia ex Japan, while it's done very well, right, 30% up in US dollar terms last year, I think the weakening dollar as well as the geopolitical situation just gives us more fodder in terms of reasons to be overweight Asian equities in a more structural way.
I mean, that circles back quite funnily into the gold story, right? And I wonder, well, first, what are your clients asking you about gold? And I imagine it's something to the extent of, do I add more exposure? But is there anything beyond, is gold beyond a tactical trade at this point?
Absolutely.
But it doesn't yield you anything, is the other point to that.
So it's the price to pay to allocate gold into your portfolios. And why is that so? We've done a lot of studies going into history on the role of gold in a geopolitical environment, as well as any sort of flux we're seeing in the currency market. Right. So I think gold, if you see it as an asset allocation tool, is very different than if you look at it as a speculative tactical trade. And of course, that's both worked out in both 24 and 25. But that said, I think we've already allocated to gold for the last 2 years in our strategic asset allocation framework, which is something that goes beyond where the price is at any point in time. It's how the asset class behaves that is more interesting for us in terms of the correlation or lack of correlation to certain currencies, as well as to reaction to geopolitical noise. So we think that it's important for our clients as well as asset allocators to look at gold more as a strategic asset allocation, which also means that you shouldn't be overly exuberant in times when the momentum is very high, but at the same time maintain the gold allocation as sort of the ballast you have in the portfolio.
You mentioned lower interest rate environments good for equities, good, weak for the dollar. How should I look at bonds overall? Just given what we've seen in this latest sort of attack on the Fed from the government, does that undermine in any way the Treasury market in your eyes?
Yes, I think the point now in terms of credit versus duration, I mean, where do we stand on that? At this point, we're relatively neutral on duration because of the uncertainties that we're seeing in terms of where rates going forward. Consensus is already priced in to the extent that consensus is expecting 2 rate cuts this year. Now, the timing of which will be very much dependent on the developments on the Federal Reserve Board, as well as the data coming in. So I know we said that the jobs report maybe is not as headline grabbing today versus on Friday, but it is an important report as a signal of the health of the US labor market. So the unemployment number coming down to 4.4% is actually a reversal of trend, and that actually means that the consensus may not be as straightforward as before. So it's more likely that perhaps on a timing basis, we don't get a rate cut in January, but certainly at least in anticipation of the first half, perhaps. So that put some uncertainty on bonds, but from a total return basis, bonds still plays a very important role in our portfolios. Granted that spreads are relatively tight in high quality bonds, but we do think that bonds still, deliver a very attractive all-in yield in an environment where inflation is non-zero. We do need the income coming out of bonds. But more importantly, I think we also advise clients to look beyond bonds in search of yield. Right, and yield can come in various forms, whether in the private credit space, in terms of also equity yield, which is relatively attractive here in Asia. So we do think that broadening out that yield environment in terms of where we get yield could be also constructive for our investors.
Jean, hold that thought. More from Jean Chia there, Global Chief Investment Officer for Bank of Singapore. She's in Hong Kong for us here today. We're going to have more coming up as we count down to the open of trade in Shanghai, Shenzhen, and Hong Kong. It's a busy, busy Monday morning in terms of news flow here. Futures, though, still up when it comes to China. We're up about 0.25%. This is The China Show.
Good Good Monday morning. Welcome back. You're just in time here for the fix of the day on your screens. Reason that is perhaps of more significance today is given this nearly across the board drop in the U.S. dollar. If you're wondering what equities are doing, we're extending the gains that we had from Friday, although U.S. futures are pairing some of the gains in the Monday session. And as far as the precious metal space is concerned, so oil is up, precious metals up even further. As a way just to recap where markets are with everything that's going on. We haven't even talked about what's happening and what could happen in Tokyo in Japan.
Yeah, I mean, that weakness in the yen, as you mentioned, has reversed a little bit just given the Fed news, but certainly that is going to be front and center when Japanese markets open up here tomorrow. It certainly is going to be the case, given what we've been hearing from local media, right? They're saying that Prime Minister Sanae Takaichi is considering calling snap elections next month. Now, adding to the speculation, remarks from a party leader in her ruling coalition who cited a shift to, quote, a new stage in politics. Let's bring in our chief Malaysia correspondent, Stephen Engel. He's been tracking all developments for us. A new stage. What does that tell us here on what's to come?
It tells us that perhaps this snap election is going to come sooner than many had expected. A lot of people were expecting after the budget is passed. You know, her budget needs to be passed by the end of March, the end of this current calendar first quarter, the beginning of the fiscal new year. That was widely believed to be her main priority, obviously. But now, given, you know, her polling numbers, if you will, are upwards of around 70%. I saw a poll this morning from JNN saying her cabinet's approval rating was at 78%. So perhaps she's looking at, and the party elders are looking at sort of leveraging her popularity right now, maybe getting a few more seats going forward, you know, to kind of back her fiscal stimulus policies. But again, it's a razor-thin majority that she has right now in the lower house. And she's actually does not have a majority in the upper house. So this snap election would dissolve the lower house and then, you know, a lot of speculation is that it could be as soon as the opening day of the next session of the Diet, which is January 23rd. So that's 11 days from now. That would then, according to the speculation that was also posted Friday by the Yomiuri newspaper, that then the election could happen as soon as February 8th or February 15th. And again, the Constitutional Democratic Party, the main opposition party, says January 23rd dissolution of the lower house is very likely. So it's not a foregone conclusion, guys, because there are still lots of issues to get through. The cost of living issues in Japan, passing the budget, but at the same time, her popularity has been burnished by what has been a sort of a steadfast stance against China in that ongoing spat.
Steve, I want to talk about the yen component here, and I think our producers are about to flash a two-day look at the yen, right? So going into today, 1 year low on the currency, and we were talking in the newsroom whether or not this might merit a conversation around yen intervention or, you know, early innings of that, and then the DOJ, the New York Times story dropped, and arguably they did the intervention on the part of the Ministry of Finance. How should we be looking at that risk at this point in time going into this fresh week?
Yeah, I think you're absolutely right. The yen appreciation against the dollar has more to do with dollar weakness right now. But there is speculation, of course, as we were at 158.18 the last time I was on about 2 hours ago and heading towards 160. It was weakening against the dollar, strengthening now, perhaps because of that subpoena story that came out on the Fed. So, again, are we in intervention watch? Well, yeah, when the yen is at 158 or thereabouts, we are always on that. But again, the officials we've spoken to within the Ministry of Finance, it's not necessarily about 160 to the dollar or a specific number. It's about the pace of depreciation against the dollar that they're concerned about for possible intervention. But I think any time going forward until we do get a dissolution of Parliament, of the lower house, or, you know, confirmation from Takaichi-san's government, you're going to have a sort of speculation that there could be a Ministry of Finance intervention on the yen.
Steve there in Shanghai for us, our Chief North Asia correspondent. The other angle to the China story on this that we didn't get to, we'll talk about it later, is the Nikkei's reporting that China might be looking to curb civilian use of rare earth exports to Japan, which is, of course, something that is of more consequence there. Still with us here on set, Chia, Global Chief Investment Officer at Bank of Singapore. I mean, Japan's been favored for 3 years as an equity market. Does this change anything in your view from a very sort of top-level perspective?
So, as a Japanese investor, I think what we are looking for is really the fundamental change in the economy, especially with regards to corporate restructuring, potential M&A, and just consolidation of inefficient industries. So that's been a multi-year phenomenon for the last 2 to 3 years, and Japan was indeed one of the best performing markets last year in yen terms at least. So that actually shows that I think investors are much more focused on longer term trends. It's a base case that the yen will be volatile, not in its own right, but because of the US dollar volatility that we're seeing, that does whipsaw the yen unnecessarily at some points. But we would like to see, for example, the BOJ getting back on track in terms of rate hikes potentially, and also the inflationary expectations for the year ahead. But I think from a fundamental standpoint, we've already gone neutral on Japan, ahead of course, the fact that it's done very well for the last 2 years. But we do remain very constructive because Japan, or indeed North Asia, has been one of the beneficiaries of flows looking for AI proxies, if you like.
It is an AI play now.
And I think that continues because a lot of the upstream production, semiconductors, are still very much dominant in both Japan and Korea. So we do think that North Asia remains a very important market as far as investment is concerned.
All right, Jean. We'll have more from Chia there, Global Chief Investment Officer, Bank of Singapore, staying with us, of course. And, of course, we count down to the open of China. We'll see. I mean, futures are still pointing quite positively here, and Hang Seng is also up by 0.5% in the pre-market. Key to watch is the strength in the renminbi. We're at 696 levels right now, just given the weakness that we've seen in the dollar, given those Fed headlines here. So certainly that's going to be dominant here. Is Asia going to be that sort of haven play? Looks to be the case here so far on this Monday morning. Putting more ahead, this is Bloomberg. Some stocks to watch. The obvious ones, which of course is the oil majors here this morning, just given what we've been seeing when it comes to oil prices. And certainly we're coming off some of the initial moves that we saw when it comes to crude markets, but we're still seeing, in terms of the equity space there, they're still benefiting from that oil pop that we saw the last few days or so. PetroChina up about 1%.
Yep. Trading debut today. Chinese chip designer OmniVision up in the gray market, up a little bit going into the opening bell, of course, and live pictures out of the exchange, which is almost a daily exercise on this part. The banging of that gong, the opening bell, all that is just ahead. You're watching The China Show. Good morning. Right, welcome back. You're watching The China Show. We are counting down to the first session of the week. We're higher 0.5% in the Hang Seng Index. A50 futures are pointing to some upside. Japan cash markets are closed. The rest of the region is doing well. I think Korea and Taiwan last week checked are up 1%. AI continues to be a theme. And speaking of AI, OmniVision, which is a chip designer, is making its debut here in Hong Kong.
Yeah, that certainly is going to be the buzzword here today. And given all the news flow, we wonder how it's going to do. But it seems like, at least for now, you're seeing this region and the equity space still looking quite favorable here, just given the risks that we've been seeing when it comes to Fed independence, with, of course, this criminal case or criminal charges being put forth here on the Fed. Is that going to be a direct sort of threat to the dollar, to the treasury market? But there you go. Multiple gong bangings here for OmniVision. But certainly there, $616 million raised there for the company. But certainly, yes, it's a big week, big year already when it comes to IPOs here in Hong Kong. Looks like the good times continue here for OmniVision. First day, 5% up.
Yeah, just to mention that too. So this time tomorrow, it's going to be Giga Device, which I think priced at the top end of the range is something to watch ahead to. Oh, Thor would be happy with a golden hammer.
Hammer.
Yeah.
Oh, is it a special one?
Okay.
Oh, interesting. Is that a new thing?
Well, I mean, with gold prices where they are, I wouldn't be surprised.
That thing must be worth a lot.
Yeah, it doesn't look as heavy though as one would think. I mean, if that is, it's worth its gold in terms of ounces, then that's certainly much more. But yes, it is a golden era.
Must
for
be a new
listings.
gift that they give out to all the new
I
companies.
want one.
I know. Oh,
Yeah.
there's things.
We need props here too.
Yeah. There you go. It looks to be pretty golden when it comes to equities still here today. So onshore markets are still looking pretty good. Shenzhen seems to be outperforming at the get-go here. Of course, we're watching very closely what commodities are doing. It still seems like things are firing up there with, you see crude. Shanghai crude is doing a catch-up story. We're up some 2%, but copper is still up some 3%. And certainly that has continued to be a very bullish story when it comes to Dr. Copper as well. Focusing, of course, when it comes to the tech space, and you're still seeing, the chip space, the hardware space still doing quite well. Look at Capricorn Tech. We're up 2.5% here. And so it seems like right now, onshore is still looking strong. Let's see how Hong Kong does here, because, the battle between A and H seems to be leaning towards A this year, given from what we've been hearing so far from a lot of the analysts. But it seems like today you're still getting a flavor of H's Tech there, where we're still seeing about 1% upside. Interesting to note, right? We've been hearing a lot more rhetoric from the regulators in China when it comes to the food delivery space, the intense competition. So we did see the antitrust body in the recent news probing this, what we've been seeing in the food delivery space as well. That certainly is going to be a key focus for the likes of Meituan. But we are seeing the stock up some 3% here today. Baidu's also up some 2%, so doing quite well on that front. Xiaomi's bucking the trend in some ways. We're down about 1%. Dollar China, that's one to watch as well. Just given the dollar moves that we've seen, does that give more impetus for a stronger currency? And we're seeing 697 levels, so we are well below that 7 handle here right now when it comes to dollar China. One to watch, though, given the Iran situation also. I think when it comes to oil stocks, right? So certainly it's interesting the reaction that we've been seeing. There you go. It's a bit of a mixed picture, though. It's interesting, though, when you look at the response that we saw some of these oil stocks in China after Venezuela.
Yeah.
They definitely got smacked at that time. This time around, you see a bit more of a mixed picture among some of these oil players here, just given the fact that they are also a very big importer of Iranian oil. Much more could be at stake when it comes to oil markets, given the Iran situation. It seems like right now we are on the brink of some collapse here when it comes to regime. So certainly we're watching that very closely here. Ningbo Rubber, that one is coming back online.
It's down a lot.
Oh, there you go.
Oh, okay.
After that probe,
Limit.
we're down, limit down.
Yeah, it's being investigated. Let me just have a look at where we're. So it's resuming trade today, as Yvonne is pointing out here. So the regulator is investigating the company. This is the CSRC for suspected major omissions in terms of disclosures regarding abnormal share price fluctuations, which is, somewhat ironic, but it goes back to the fact that we are getting some substantial share price fluctuations there on the stock itself. Okay, just for some final thoughts on what's noise, what's signal, and especially what's really been an asset class that's almost gone completely on its own. It's dancing to its own, to the Chinese markets, the AI play there. Chia still here with us in set, Global Chief Investment Officer at Bank of Singapore. Chinese markets had a breakout year last year, outperforming the S&P. What advice are you giving your clients now in terms of exposure there?
Just to give you a bit of a backdrop and background is that we went overweight on Hong Kong, China in Q3 of 2024. Back then, if you recall, it was
a PBOC one, right?
Lots of stimulus.
Well, not just stimulus, but it was thankfully pre-stimulus.
Yeah.
But also at that time, I think allocation was relatively light across most investors, mostly underweight and at best neutral, because there was still a lot of concerns over the real estate market and consumption as a whole. And of course, the policy stimulus came about, perhaps was a little bit of a disappointment at that time. But I think investors have gotten round to the fact that this is a new phase in terms of policy direction over the past year, and also re-articulated at the CEWC, and was the policy direction is very much more about a more stable growth environment as opposed to hitting the headlines on GDP growth. So that actually bodes well in terms of the stability of the various sectors and the broadening of the market in general for a more sustainable investment landscape ahead. So we remain overweight on Asia ex-Japan as well as Hong Kong, China all through that period, and we continue to open the year with an overweight on Hong Kong, China as well as Singapore and Malaysia for the Asia ex-Japan overweight. And why is that so? We do think that valuations still remain relatively attractive. Yes, it's had a good run, and therefore we're a bit more cautious perhaps on the stock picking front. So we believe in more of a barbell approach, if you like. On the one hand, high quality yield plays that continue to provide stability, and exposure on the thematic front on the AI plays as well as policy beneficiaries. What's been clear are the 8 policy priorities for the year, which of course we're seeing more color and more details when the NPC does come up about in March, and we get more details. But at least from a directional point of view, we think that the policies are very constructive, including, as you mentioned, the consumer subsidies as well, broadening of the definitions. All that is pointing to one thing: affordability. So I think not just in China but globally and in the US, the key concern now is affordability as incomes or wage growth fail to keep up potentially inflationary expectations. In China, it's a slightly different dynamic, of course, but certainly we'll look for the final 2 sort of concerns for the market. One is consumption growth, so any policies that potentially could ease pressure on the still quite nascent consumption growth would be very helpful. Secondly, of course, stabilization of the real estate market, which has been the bugbear for many years now. If that potentially we could see some stability going forward, or at least bottoming out, that will both be very strong catalysts for the Chinese market.
You mentioned you see room for this rally to broaden. So beyond tech, I mean, where do you see as the new opportunities now?
Yeah, so similar to where we see the AI trade, generally speaking, I think China has articulated a strategy on AI adoption across industries up to 2035, right? For all the industries to start to use AI. So we expect the proliferation of AI use cases to translate into potentially margin expansion, earnings growth, and new areas where AI can be applied. Right, so I think while the first phase of the AI adoption is very much in the large language models and very basic applications, this could start to go into areas like health tech or in terms of the renewable energy sort of developments to support AI growth. I think all of these are potential sort of ecosystem beneficiaries that start to come about, and the strong IPO pipeline that we are seeing both in the A and HSBC market, potentially we can see more new players in the subsectors, which will broaden out the expansion, the market penetration.
Okay, Jean, it's great to have you. Thank you for sticking around with us this hour. Jean Chia there, Global Chief Investment Officer, Bank of Singapore. She's been covering all things for us, given the news flow. We got more breaking news coming through from the U.S. president. So Trump says that he is now looking at ways to, the response to Iran. So Iran called to negotiate yesterday on nuclear, and he also says he may meet with Iran. This, of course, as we've been hearing, that President Trump has been weighing his options when it comes to the country amid these nationwide protests that activists say have left hundreds of people dead at the hands of security forces.
Okay. We're looking at it very seriously. The military is looking at it, and we're looking at some very strong options.
Right. I feel like we've had this global context conversation with the Venezuela story last week.
Yeah.
Similar paradigm, but certainly a much bigger in terms of actual production is concerned, right? So Iran in terms of, by the numbers, if you look at its oil production, when you look at OPEC, right? So how does the pie split? And this is based on the latest numbers late last year, coming up on your screens. So we're going from, I think it's Saudi's number 1, and then in terms of, you go down the ranking, Iran comes in at number 4, 11.5%. Now, in terms of the spare capacity, Iran goes up by 1 ranking to number 3 in terms of total capacity estimated, less what they're actually turning out as of December, gets you to about 500,000 barrels in terms of spare capacity. Now, where does the China angle come in here, right? So most, and when you look at various data sets, most of what Iran pumps out, the vast majority, goes to China. 90% is what China buys, roughly, based on the numbers out there. And as you can see on the graphic on the left side, which is Bloomberg estimates of Iranian oil exports to China, and as you can see in the last year or so, that spiked up substantially to where it is right now. So you put the numbers together, China does get, I think it's about 13, 14, 15% thereabouts of their oil mix from Iran, but from an Iranian perspective, it's almost everything goes to the Chinese.
Yeah, and for more on really how oil markets are reacting to the protests in Iran, let's bring in our oil trading reporter, Rongwei Neo, on really what conversations with oil traders have been like. I wonder, Rongwei, over the weekend here, you know, we look at the Venezuela situation and people thought, yeah, I don't think it's going to be that market moving. You know, is the Iran situation more of a wild card?
It's been a week fraught with a lot of risks to the oil markets. I remember just a week ago, I was here at the studio explaining what the Venezuela situation means for global oil markets, and now we're looking at Iran. However, the conversation over the weekend, we do have to note that a lot of the developments in Iran, yes, there is escalating unrest, and there is increased caution as well as fears that US President Trump could take real action against the Iran forces soon in a bid to counteract their actions against their very own domestic protesters. But a lot of these are in early stages. We haven't quite confirmed or seen if any of these unrests are actually centered or affecting any of the oil-producing regions in Iran. And also, even though despite President Trump's comments, he's slated for a meeting later this week to discuss his options against Iran. So nothing quite has spilled over into the physical market just yet. And today's oil prices is testament to that. At open, oil prices rose slightly on increased fears, but as the market began to digest what it actually means for the physical flows of oil, prices have started to come down quite a bit. And that's where we are at in terms of this developing situation.
Yeah, I think you were getting seated wrong way. Well, this line crossed of perhaps it's going to be more a conversation ahead of perhaps anything more drastic that Donald Trump saying that he may meet with Iran and they call to negotiate. What scenarios have traders that you speak to gamed out based on what that means for the oil price?
So largely, as both of you have rightfully mentioned earlier, the biggest impact in the physical market will likely be felt in Iran's biggest buyer, which is China here. Now, for some context, China has been absorbing about 90% of Iranian exports, and it comes at a good time as Iran oil is sanctioned, which means practically everyone else in the oil markets kind of steering away from it. So China has long been enjoying like steep discounts on Iranian crude, and that has helped them as they grapple with a lower domestic crude demand as well as poorer margins. So these refineries, they are really reliant on such cheaper crude to keep things going. And one of the situations or one of the scenarios that traders are looking at is if this sanction flow from Iran to China is sort of cut off, it really pushes China onto the mainstream market. They'll be likely taking in more crude from the mainstream market and competing with other buyers for your typical Middle Eastern grades, your mainstream ones. And that's one, I would say, typical fear that the market has.
Rongwei Neo, thank you so much, sir, oil trading reporter in Singapore for us. As we were just talking there, oil prices hitting session lows right now in Brent. 62.92 right now in the most active contract coming through, and there's a separate but related bid across precious metals. We are coming off highs, but as you can see, substantially to the upside this Monday. The currency markets, this one is very consistent and clear, just about across the board. Dollar is weaker against most peers, as you can see on the screen. Dollar China right now, 697.29. Right. We're barely 2 weeks into the year, but it's been a consistent theme that's really carried over into 2026. The strong bid that Chinese healthcare stocks are catching. Year to date, we're already up 13% after what already was a fantastic year for biotech, specifically in 2025. Joining us to help us understand where the industry is specifically on a corporate basis and what trends to watch. Joining us now is Lency, Head of Business Development at Haisco Pharma Group, joining us to just help us understand. And of course, it's a big biotech conference that's taking place, of course. That's a JP Morgan call. Lency, good morning from the Asia Pacific. Thank you for joining us, I believe, on your Sunday. So talk to us. I believe you guys have an announcement to make. Just help us understand what that is.
Mm-hmm. Thank you for having me. So last week, we entered into a license collaboration with Nexus. So this is actually a new company backed by several blue chip U.S. investors, including Frazier Life Science, or BMAT, and Goldman Sachs. So by entering into this partnership with Nexus, Haisco is enabled to receive a solid upfront of over $100 million US, and also the total deal value can come up to over $1 billion. Plus equities, royalties, and also the sub-license income. So to us, it's a quite encouraging collaboration or partnership we look forward.
Yeah, Nexus, this is, as you mentioned, a so-called new co, which is a newly formed VC-backed sort of startup. Can you tell us a little bit more about the rationale of choosing to use them as a partner versus a more established biotech or pharma name?
Mm-hmm, mm-hmm. So this time we collaborated with Nexus and also the blue chip investors I just mentioned with the asset, which is HSK 39004. So it's a dual PD3 and 4 inhibitor. We have both formulations, the nebulizer and the DPI. So other than a traditional pure out-licensing deal, under the NewCo model that Haisco is entitled to 19.9% of the NewCo stake. So in which we believe that we are more closely involved in the product development in the future. And also we are able to share the upside with our partners and with our stakeholders. So that's kind of the main difference, which is different from the traditional out-licensing deals.
And does this tell us anything that's more specific on your plans in terms of overseas expansion, Lency?
Mm-hmm. So through this, because Haisco is really an innovation-driven company from China, and with collaboration, we think that signals the premier investors in the U.S. They recognize and also has a great confidence in the data we generated in China. So also in light of this trend, we were hoping that Haisco will step onto a more partnership-led globalization with our company. So we will seek for a more strategic fit and active partners to globalize, to do the global development of our assets.
Yeah, can you tell us a bit more about what it could be on your radar in terms of future licensing deals? Tell us a bit more about your overseas ambitions.
Mm-hmm. So for now, within Haisco, we have 48 research programs ongoing, and among them, we have around 30 active pipelines. So I would say all those assets, we are eager and actively looking for partnerships. So regarding, we definitely will focus more on the more matured pipelines, such as, for instance, we have a PD4B inhibitor, which is completing the phase 2 in China. And for that, we are looking for the partners with the capabilities in IPF and also multiple autoimmune disorders. And other than that, we also have we believe, which can be a potential blockbuster, is the oral IL-23 peptide. So for this one, we have already entered into phase 2 development for psoriasis and also IBD indications. So for that one, we also are looking to a active partnership on those 2 assets. And speaking for the early stage assets, we are looking for the discovery platform collaboration and also the platform collaboration.
And we don't see many, I think that the point you're making, that you're open to collaboration on many fronts, multiple, in fact, I think is an understatement, just judging by the tone, Lency. We don't see many Chinese companies going at it on their own, especially overseas and late stage. Do you think that's a trend that we should expect to continue? And what do you think the challenges are for that to change longer term?
I think the reason why still the biotech or pharma players in China, we look for a partnership-led strategy instead of doing our own commercializations in the US and Europe, is that the commercial success is built on accumulation. So that cannot, happen without years of experience and a track record in accumulating the right people, having the right team to promote the product in the US and Europe. So far, maybe while speaking for Haisco, we don't have that infrastructure established. So far recognized the limitation. So we still root for a partnership-led strategy. But on the other hand, I think Haisco has invested heavily into our R&D. So definitely our pipeline and our R&D capability is more on the mainstays. So that one, we try to leverage the existing capability and complement with our partners' capabilities to provide our drugs to serve the patients worldwide.
I'm just wondering, in terms of domestically in China, obviously we've been seeing some of your peers dealing with issues like discounts and the intense competition in the pharma side of things. I mean, how are you looking at the domestic market overall, and maybe some of the key challenges that you're focusing on for 2026 now?
Yes, there's definitely a very heavy pricing pressure in the industry. I think that's also the reason why Haisco transitioned itself from a more generic-focused business to an innovative-focused business. So for now, we've launched for our proprietary innovative medicines. So to conquer, how to face the severe competition is that when we orchestrated our pipeline, we try to avoid a highly competitive segment, those the red oceans segments, and I try to focus more on for instance, we have built a pipeline on anesthesia drugs and many in pulmonary fibrosis and many specifically chronic diseases in renal and the liver disease area. So the strategy Haisco is rooting for is try to avoid the red ocean and orchestrate a differentiated pipeline.
Lency, it's great to have you. Thank you so much for joining us. Lency Gu, Head of Business Development at Haisco Pharmaceutical Group. The company is, of course, taking part in the 44th Annual Healthcare Conference hosted by JP Morgan in San Francisco. All right, we're checking markets here right now. Obviously, a lot of news flow here, but we're watching some of these DeepSeek-linked stocks here right now. So they're all rallying after this report. Oh, get this, V4 model launch. So I think anything DeepSeek related certainly does lift the markets and moves the markets when it comes to the whole AI play here this morning. So there you go. You see some substantial moves there on that front. We're also watching battery stocks. When you look at China, when you look at Korea as well, there's been sort of news of them on this export tax rebate change. So you are seeing a bit of a drop here on some of the China battery shares. You're watching the China Show.
The threat of criminal charges is a consequence of the Federal Reserve setting interest rates based on our best assessment of what will serve the public, rather than following the preferences of the president. This is about whether the Fed will be able to continue to set interest rates based on evidence and economic conditions, or whether instead monetary policy will be directed by political pressure or intimidation.
Fed Chair Jay Powell there speaking after the Justice Department issues subpoenas against the central bank, threatening a criminal indictment related to his June congressional testimony on renovations of the Fed's headquarters. Welcome back to the China Show, guys. It is a busy news day, and we did not expect this news when it came to the Fed to really drop into our inboxes here this morning, but certainly that is the case, and that's why we are seeing dollar basically weaker across most major currencies and EMFX here this morning. That certainly is helping at least the equity space in this part of the world too still, Dave.
Yeah, it really is. In fact, if Japan was also open, because that's the other story we'll get to later, it would be trading at 54,000 on the Nikkei specifically. When you look at where futures are trading, there was a very weak yen story until the dollar started to crumble in the early goings, and hence the levels you're tracking on your screens right now with the dollar that's weaker just about against everything with the exception, I had to look at, I think it was the Russian ruble and the Turkish lira very early. Apart from those two, dollar's trading weaker against most peers. It's also a commodity story related to that, so everything from Brent, which is last we checked, was trading at session lows. We have managed to claw back the 63 handle, and this very strong bid we're seeing across precious metals, 5% to the upside on silver, fresh record for gold. We're trading richer by about 2% as far as that's concerned. That's also having an impact on the equity markets, to Yvonne's point, where you have materials leading the gains today, along with, of course, the tech overlay, which is AI, but we can get to that, I guess, another day.
Yeah, let's get more on this top story here when it comes to the U.S. Justice Department threats of a criminal indictment over Jay Powell's congressional testimony about the renovations, of course, of the Fed headquarters here. You just heard from, of course, Jay Powell there. That's just a pretext. The investigation is really motivated by President Trump's desire, he says, for lower interest rates. Let's bring in our Federal Reserve and economy reporter, Edna Curran, joining us from D.C. This certainly is a bit of a surprise this morning, Edna, but just walk us through. I mean, it seemed just from the tone from Jay Powell, he was a bit shaken by this news.
Yes, Yvonne, it is a surprise, and it's a dramatic escalation of the Trump's White House pressure on the Fed. On the one hand, it's clearly another political attack on the Fed, using the renovation testimony as a way in to put more pressure on the Fed. Obviously, we know they want to bring down interest rates, but the White House administration clearly wants Fed Chair Jerome Powell to, not just when he finishes up his term as chair in May, to make sure that he moves off the board as well. He can actually stay on the board of the Fed until 2028. So that's the political pressure side of it. And then, of course, the Fed response is also very notable. I was speaking to people tonight, and clearly there's this kind of sense now that all niceties, such as their war, are now done with. All gloves are off. The Fed is calling this out for what it is, which they are saying is clearly a political attack on the Fed to steer policy, steer personnel, not in ways that are driven by what the economy needs, but in ways that are driven by what the political cycle needs. So it's quite an escalation. It's clearly a very serious move, and it's all about more political pressure on the Fed.
Yeah, I guess, and before we talk about the potential policy implications, I want to highlight again the threat of criminal charges. What could happen here, given that new component?
Well, there's a long way to go in terms of what the legal process is here. This is fairly unusual, unprecedented territory for the Fed to find itself in. Of course, it's a threat of an indictment. You've already heard that the Justice Department are targeting Chair Powell for remarks he made in testimony about what exactly the Fed were doing with those renovations. The Fed is already pushing back in that statement and the video by Chair Powell contesting those allegations, of course. So that's going to be a long process in and of itself that will follow a legal route, just like all the other legal challenges going on in and around the Fed and other agencies here. But if you step back from that part of it, again, speaking to people tonight, they're just making the point that clearly the White House has a particular concern here that Jerome Powell might remain on the board of the Fed even after his term as chair is up. Now, the significance of that is President Trump has said out loud he's looking to get a majority on the board of the Fed, and the outside perception looking in, based on the commentary from the White House, is that they want to get people on the board of the Fed who are open to the Trump White House view of the economy in terms of what that is, which is, of course, lower interest rates. And Chair Powell staying on the board would potentially be an obstacle to that. Now, lots of unknowns in this, but that's how it's being read by Fed watchers.
And what are you hearing from the analysts that you're talking to? I mean, we've seen dollar is weaker across the board. Does this just add more fuel to the whole dollar debasement trade?
Well, there's a couple of things on it, Yvonne. Near term, people aren't seeing this as sort of adjusting the US monetary policy debate. That's a kind of a different story. The Fed isn't going to turn around and cut rates just because of this. But to your point, the optics of it are certainly not good. To have the Fed chair coming out in a YouTube video on a Sunday night defending the Fed's independence from the White House. Some analysts I spoke to tonight make the point that markets will react very negatively. It could be another one of these triggers to pull money out of the US. We can't overstate that at the moment, though. We've been through this sell America, buy America story a lot last year, and we saw how that ended up. But right here, right now, it's negative in terms of optics for what it means for the Fed as a preeminent global economic institution. An extension of that is global investors won't like it, and we'll see how the markets respond as your day goes on and the US day opens tomorrow.
Yeah, based on the current pricing early in the Asia Pacific, that looks to be a weaker dollar going into the thick of things this Monday. Enda, fantastic. Thank you. Enda Curran there, our Federal Reserve and economy reporter over in Washington for us. It's a weaker dollar, slightly weaker oil price. Precious metals are bid on the back of also separately all the developing news coming out of Iran on the weekend, into some commentary in the last few hours from the U.S. president on the Iranian story. Joining us now to talk about the oil market implications, Mukesh Sahdev, founder, CEO, and chief oil analyst at XANALYSTS. He joins us from Sydney. Mukesh, it was just this time last week we were talking about Venezuela, which didn't, I think, to the point you made last week, wasn't as big, or isn't, present tense, as big a deal for oil markets. But this one is of perhaps more global consequence. What's the thinking now?
Yeah, good to be back on the show. Good morning. Certainly, Iran is different than Venezuela in many respects. Number one, Iran is of the right quality of the crude oil, which the China and a lot of countries are hungry for, which is the medium sour barrels, whereas the Venezuelan barrels were very heavy barrels, which only few refineries or countries can process. So that makes it a bigger deal. The second thing I would say is that Iran is not just exporting crude oil to China, it's quite an exporter of the petrochemical feedstocks, the propanes and butanes. It's an exporter of some good amount of high sulfur fuel oil, which goes into the other Middle Eastern regions like UAE. So it's a much bigger deal. It's of the right quality. And the numbers we are talking about here are much bigger. We have seen now in the last December almost close to 2 million barrels of flows going to China. So I guess there is a big rush to take the oil to China in anticipation. And last but not least, Strait of Hormuz always remains is kind of a fear, a deterrent, always there in the market, so which builds the risk premium.
There's a lot of questions on what the U.S. response is going to be, given the threats that we saw from President Trump. What should the oil markets be watching out for on what the U.S. intervention sort of threat could mean?
I guess, again, Iran is different, given Iran has now, as I said, is exporting almost close to 2 million barrels of crude oil. It is also refining 1.5. So we are talking about almost 3.5 million barrels of production in the world, number one, and of the right quality. My assessment is that depending upon what kind of assurances U.S. gets from getting hand on the Venezuelan oil, that will determine the risk they can take on Iran. So far, the news is that all of the U.S. companies, execs, have not been so enthusiastic to go back to Venezuela. That will probably, put U.S. to think about to cause a major disruption in the markets, right? So I guess for now, probably this will linger on, and there may be more deal settlement versus more military style or Venezuela style, situation here.
Mukesh, there doesn't seem to be anything major that indicates that we could see a disruption to oil supply from Iran. If indeed we get to that situation, though, and I think we have to tick a lot of boxes before we get there, what are the implications when it comes to China? Because they purchase nearly all of what flows out of Iran, and I think it's 13, correct me if I'm wrong, 13-14% of their oil imports. So how does China then, how does that change the calculus for China as a buyer?
Well, I would say whether it is Iran, Russia, Venezuela, this is all targeted towards China and US. If none of these countries were selling to China, probably US might not go there. That's number one. Number two, you're right that China is a big buyer, much bigger buyer compared to Venezuela. Plus, I mentioned after US and China trade dispute didn't resolve, US and China are very much coupled on the petrochemical feedstocks. So China pushed back on the petrochemical side, and Iran provided some of those molecules. So yes, it's a much bigger deal, but I also believe that China is stocked up very well. It's not one day's preparation. Like I mentioned in last time, China prepared well in advance and is very stocked up. So for short term, if there is a disruption, China is probably okay. But this could turn out to be a winner for Canada, because Canada got worried if more Venezuelan flows to the US, what happens? But now if less Iranian is available to China, maybe China might buy more Canadian. So it's kind of quite an interesting reshuffle China has to do in their crude buying portfolio. But for now, they are quite stocked up, well loaded.
Yeah, and up until, I would say maybe the last few days, it seems like this market was leaning more bearish, right? That, the concerns around this global supply glut overshadow what we saw was the political theater that you're seeing in Venezuela, maybe in Iran. But I'm just wondering, in terms of oil prices, where do you see things deviating in the next coming days or months, Mukesh?
So another very important factor to think is the timing, right? We are not in the summer demand when US is hungry for crude oil and many other countries. We are in the shoulder period. That is one reason I believe US is taking action and getting tough right now. As we get closer to the summer, probably US will not take action. So they have to do something in the Q1 of 2026 when refineries are going into big maintenance and the crude demand is less. They can do some disruption. So I guess the spike on the crude price, probably I don't see. Elevated some risk premium, yes. But the maintenance of refining system in the Q1 will put a cap. China's locked storages and high stocks will put a cap on the oil price. Some elevation, yes. But the most important is that the backwardation in the market has strengthened. That is what we called for. And that's what we are seeing. That's more important than just the flat price.
Mukesh, great to have you back again. Thanks so much for kind of helping us sort through the news here this morning. Mukesh Sahdev there, founder, CEO, and chief oil analyst at XANALYSTS, joining us from Sydney. For more views coming up on the outlook for oil, we have FGE founder and chairman Feridun Fisharaki. He's going to be speaking with Haz on Insight in the next hour.
But ahead of that, HSBC Asset Management Asia CEO Daisy Ho joins us exclusively to discuss their expansion plans, fittingly, in the Middle East. Yep, she oversees Asia and the Middle East for HSBC Asset. That conversation's coming up next.
Right, we've been talking about how busy things have been when it comes to the news flow here, and certainly the Middle East has been front and center here this morning, given the situation that's happening and unfolding with Iran. Interesting enough, we're going to talk about how that impacts maybe the business environment and overall. HSBC Asset Management has gotten the green light to move into investment and portfolio management in the UAE. And the bank has made the Middle East a key focus under the CEO, George El-Hedary. Joining us exclusively now is Daisy Ho, Asia and Middle East CEO at HSBC Asset Management. Daisy, it's great to have you back on the China Show, and certainly this is a big milestone for you guys. Tell us a little bit more about this new license. What can you do now with it that you couldn't before?
Thank you, David and Yvonne, for having me today. We are very excited about the opportunities in the Middle East region. We are the first one amongst all the global asset managers to obtain a license from the local regulator, Securities and Commodities Authority, to provide investment and portfolio management services. So we are now setting up a UAE branch based in Dubai and offering a range of onshore funds.
And specifically, what offering can your clients now look forward to as you establish what strategies you'd be looking to present to them?
So our mission is very simple. It's to empower our clients to invest in our world-class global strategy through an onshore platform, through the local gateway. We are launching 10 funds with a range of asset classes in fixed income, equity, multi-asset, and then they are diversified, be able to help the investor to diversify their portfolio.
In terms of how you plan to expand your presence there, can you tell us a bit more what the plans are going to be? Are you going to be hiring more people in the UAE, for example?
So we have long-term commitment in the Middle East region. When it talks about hiring and people, that is our commitment in the region. In fact, setting up the branch is the commitment to invest in talent. And our objective is to continue to attract top local and international talents to be able to work with our clients there locally.
And the physical presence that you have there, and you mentioned 10, you're initially going to offer 10 funds. What of those funds are going to be managed domestically, or is it more a distribution mechanism for them to get access to the point you're making your world-class investment solutions?
The 10 funds are the onshore feeder funds feeding into our global ranges of funds. So they are manufactured and managed outside of the UAE.
Okay.
But then the clients, through this local gateway, be able to access our global capabilities.
In terms of AUM targets,
Yeah.
do you have any insight right now? Have you changed in what your vision was going to look like now that you have this license?
We are very excited about the opportunities in the region because if you look at the market, this is one of the fastest growing wealth markets in the world and the largest hub for global expats. If you look at the institutional market, it's very deep, and then they have very sophisticated client base there. This is our long-term commitment in the region.
Can't help but ask, there's a lot of instability, potential instability with the news on Iran over the weekend. How are you assessing that component of risk as you run that new business now?
So geopolitical events definitely in focus in the first 2 weeks of the trading weeks are here. And then similar to 2025, we believe the geopolitical events will continue to have important influence of the market development. So when we talk about geopolitical events with our clients, there's a lot of conversation centered around market volatility because of the political event and because of the macro and economic environment. So market volatility definitely is one of the big topics. Leading to that is diversification. So when we talk about the market, the investment strategy with our clients, most of them telling us that a complex economic and geopolitical environment has actually prompted them to look at or change the playbook, including reassessing the investment strategy to look at the diversifiers away from the U.S. assets.
So you think that sort of this whole dollar debasement trade we talk about, right, where I short the dollar, I go into precious metals and the like.
Alternatives.
Is that going to continue on, you think?
We have been talking to our clients a lot on their investment strategy, especially for 2026. There are a few key investment trends that we have seen. First of all, longer term, right? This is an emerging trend where clients are looking to add alternatives to the portfolio to diversify away from the traditional asset classes. Second of all is to add additional alpha sources. Second trend that we are seeing is asset allocator diversifying away from the U.S. assets. For the trends that just now you mentioned, precious metal, including gold. So those are the big trends that we are seeing. And closer to this part of the world, that what we have seen is the notable shift in terms of sentiment towards Chinese equity and Asian equities. So as a result of the very exciting AI development.
What is HSBC doing as far as bolstering your private market solutions for your clients, to the point you're making, right? They're not looking just for alpha, but for hedges and some structural uncorrelatedness. I'm not sure if I'm inventing a word there, in terms of their portfolio.
So at HSBC Asset Management, we aspire to provide an investment solution that be able to help our clients to weather the market volatility, as well as creating values for their portfolio. So apart from having a full range of traditional asset classes in equity, fixed income, multi-asset liquidity, we also invest a lot in developing our alternative capabilities. So this is the trend that we are seeing, starting from the institutional investor. Now we are also seeing the pickup in the wealth space as well.
Right.
Does it give you more appetite for acquisitions? I know back in 2023 you made acquired this Singapore Silk Road property. Are you looking to make any more acquisitions?
So talking about acquisition, India is a very good example. On top of Silk Road acquisition that we have made, we have acquired L&T, local asset managers, and then helping us to complete the full range of capabilities in India. Now we have full suites of equity, fixed income, multi-asset and liquidity products there. We are also having a very positive view in India over the longer term. So we will continue to look into different opportunities. When the right moments and opportunity comes, then we're definitely open-minded in terms of what we are looking at.
Has the bull market helped your business?
Definitely.
Yeah.
We are very pleased to see Asian markets, emerging market, the conversation that we have had with our client coming back. China as well. That also like due to structural reform in the emerging market, as well as some of the excitement in the AI sector.
Daisy, fantastic. Yeah. Thank you so much.
Thank you.
Hi to the team for us. Let's do this again soon. Daisy Ho there, Asia and Middle East CEO at HSBC Asset Management. Right, just ahead here in shows, we touched on the story just now. As the world digests the U.S. capture of Venezuela's leader, China is seizing the opportunity to tout its governance model as superior to the West. That in context of the new news over the weekend with Iran. We'll get into that, the broader picture with Kurt Tong and Ding Yifan coming through very, very shortly. This is the China Show.
It's the price to pay to allocate gold into your portfolios. And why is that so? We've done a lot of studies going into history on the role of gold in a geopolitical environment, as well as any sort of flux we're seeing in the currency market. Right. So I think gold, if you see it as an asset allocation tool, is very different than if you look at it as a speculative tactical trade.
Yeah, that was Jean Chia out of Bank of Singapore who joined us in the last hour or so. And I think the question we posed to her was, has gold has it gone beyond tactical at this point in time? And their answer, contrary, by the way, to what UBS told us late last year, it has gone beyond a tactical opportunity. Gold stocks on your screens up. Also looking at platform stocks coming up very, very shortly. Meituan, Baba, and JD.com. And the conversations around antitrust and maybe them needing to work more closely together in as far as achieving that broader strategy. Nuclear stocks, and as you can see, we're gaining there across some of the, perhaps even the biggest loser, which is Meituan in terms of a share price perspective there. Nuclear stocks coming up on your screens. We're looking at Meta signing a deal here, a series of deals. Meta signed a series of deals that would make the U.S. tech firm, of course, one of the biggest corporate buyers of nuclear power. Again, it's an AI conversation. How do we power this thing? Uranium's come up quite a lot, of course, and this is really a story that continues to track well across the investor space in terms of that AI theme. Plenty more ahead. This is Bloomberg.
All right, back to our top story here this morning, and it really Iran and what the impact this is going to mean for the likes of China, right? They're going to be carefully watching the latest unrest in the country as a major buyer of Iran's shipped oil, taking a reported 90% of course, the share last year. Now, Tehran has warned the U.S. and Israel against any intervention, especially after ousted Venezuelan President Nicolas Maduro was seized and taken to New York to face U.S. charges of narco-terrorism. Now, as the world digests the implications of that, China is taking the opportunity now to ramp up its messaging that its government's model is a superior alternative. Just last week, take a look at the People's Daily. They published this piece of the head of the ruling Communist Party's international department on why Beijing's development and political system present a new path for developing countries. Now, according to Liu Haixing, Beijing's rise has shattered, they say, what he calls the Western-centric logic that equates modernism with Westernization. Beijing has hosted a series of high-level diplomatic engagements, meanwhile, this year, including last week's state visit from the South Korean president.
Yep. Okay. So, yeah, it's a very complicated story, right? So the specific framing when you look at what's happened, and let's not get to Iran first, right? So Venezuela's story was an opportunity to really have a look at how it was one specific front at which maybe it was a move on oil, maybe it was countering to the point that, and I'm going to play the soundbite in a moment, I'm just setting it up, maybe it was a move against China's growing influence in that part of the world. And I think the point that our guest earlier had mentioned was, if you look at what's happened with Iran specifically too, that's also a front where China has a very strong relationship in as far as that was concerned, right? So let's have a look at what Mukesh had to say in as far as the big picture context, this was a move on the part of the U.S. to counter China, given its different points of influence across the world. Let's split it out, guys, if we can.
I would say whether it is Iran, Russia, Venezuela, this is all targeted towards China and US. If none of these countries were selling to China, probably US might not go there. China is stocked up very well. It's not one day's preparation. Like I mentioned in last time, China prepared well in advance and is very stocked up. So for short term, if there is a disruption, China is probably okay.
The Donroe Doctrine sounds great in terms of military control of the United States in its backyard. Trump can accomplish that, but China is the dominant economic power for most of these countries, and they're developing the electricity stack and the AI capabilities that these countries are going to want to use. So ultimately, the Chinese are in a better position to have more influence around the world, even in America's backyard, because of those investments.
Okay, let's bring in Kurt. Okay, what are you doing? Okay, I'll do it. So joining us now to talk us through this, Kurt Tong, of course, is the managing partner at the Asia Group. He's a former U.S. ambassador to APEC, former U.S. Consul General here in Hong Kong and Macau. Kurt, good morning from Hong Kong. I mean, there's so many things I want to ask you. Good morning. There's so many fronts here, but why don't we start out with what do you think the U.S. is trying to do on these multiple fronts?
Well, I think that the United States and particularly the Trump administration are trying to achieve multiple objectives. In Venezuela, their goal is to change the government, its orientation, regain improved access for the United States into that country, and push Cuba out. And so it's multifaceted, very specific, rather narrow objectives, which are they're pushing forward on. I think there is this emerging pattern and a lot of dialogue about what does this mean for the position of the United States globally, and what does it mean for the position of China globally. I think it's important not to overemphasize the changes and really very long-term and major trends in the region and conflate those with episodic circumstances in places like Venezuela or Iran. I think there's a long-term trend of the United States becoming less influential on the global stage, reaching towards its strengths in geographic proximity and military power in order to compensate for that, but China also continually becoming more and more potent on the economic front worldwide. And so all of those things are going to continue to happen simultaneously. It's a complicated picture, but important not to make too many grand conclusions based off of one or two episodes.
Yeah, Ding, I want to bring in Ding Yifan as well, Kurt, senior fellow at Renmin University's Institute of Global Governance and Development. He obviously previously served as deputy director of the Institute of World Development under the China State Council. Yifan, thank you so much for joining us. From what Kurt had mentioned, he says it's hard to kind of extrapolate kind of from these recent events what the U.S.'s rationale is in, but there has been a lot of talk of these kind of spheres of influence, which the U.S. is trying to kind of shake up the world order in some ways. What is your perspective on this, and what do you think is China's perspective on this?
Oh, actually, it's very hard for the time being to assess Donald Trump's behavior, both in Venezuela and with regard to Iran. So generally speaking, Donald Trump's administration is in a position of U.S. strategic retreat. Look at their National Security Strategy report just published at the end of last year. It showed that, to some extent, Trump administration wanted to reach a sort of a detente with great powers, with China, with Russia. That's why he wanted to make all his effort to stop the Ukrainian war, and then that to reach a sort of a modus vivendi with Russia. And with China, he wanted to reach some agreement on all aspects, saying that he don't want to confront China and he wanted to reach some agreement with China at the last summit of G20 in Seoul, in South Korea. All these showed that he wanted to be more restrained with all these Americans' positions in the global stage. And he wanted to withdraw from other part of the world to be concentrated more on the West Hemisphere, especially in America. That's why he wanted to take over Greenland, to build the North America a fortress against all external forces. That's the general assessment. But in recent days, he just launched a military assault in Venezuela to try to kidnap another country's leaders. So that brought us to the old days, to the medieval age. At that time, so the king is always the target of kidnapping other countries' kings in order to ask a huge ransom. It was the way how the politics has been conducted in the medieval time. But nowadays, all this kind of behavior is blamed, is criticized as uncivilized. So it's very, very hard to abduct another country's leader and then to ask to negotiate with other countries in order to obtain some advantage. But Donald Trump, in his statement, is saying that the U.S. will put its hand on Venezuela's oil fields, and he asked American oil companies to get ready to go to the U.S. To the Venezuela. It's at all. But with regard to Iran, Iran is in a fragile position nowadays. That's why the U.S. said that Donald Trump said that he wanted to intervene to Iran to stabilize the situation. Actually, Iran is in a chaotic situation because of the collateral damage. And then destabilization is triggered both by capital flight and by some Middle East instability and external forces are trying to intervene in Iran's situation.
Ding Yifan, this is David. So a lot of people are wondering if China should respond, and if they did respond to these many fronts, in what form do you think that's going to come? Or are we overthinking the need for a Chinese response here, generally speaking?
Generally speaking, I don't think that China will respond to this kind of a chaotic situation by military means. It's not China's way to do things. China will try to bring people together by negotiation to try to reach some political arrangement, a sort of modus vivendi in all these conflictual situations. So to some extent, China has a vision in longer term, in medium and longer term. So we wanted the stability in the world. Of course, stability in every region in the world, in Middle East, in Latin America, because stability is a way to push things forward, to push Chinese competitive edge. Chinese competitive edge is to help all these countries build a better future. That's the idea of Chinese leaders to push.
Yvonne, I want to get Kurt in on this question too. There's a lot of, say this is an opportunity for China, Kurt, for the mainland to kind of be the peacemaker, be the stabilizer amidst these geopolitical tensions, and be sort of that global champion. What's your response to that?
So I don't think that many countries actually, or peoples, are specifically looking to China to play a role in countries where there's a situation of instability. Like the Venezuela situation, the Iran situation are quite different. The U.S. has a historical role in both countries and historical relationships with both, which is pulling the United States into those situations. China has a commercial relationship with Venezuela, commercial relationship with Iran, no particular relationships beyond that. So I think it's really a question about not sort of China versus the United States, but rather the United States' role using unilateral measures to affect policy in troubled countries versus the global system doing that on a systematic and consensus basis. And that is, I think, the real dynamic here at play, not so much a China-U.S. dynamic. And to repeat, I don't really think that people in Iran or Venezuela or the Middle East region or Latin America foresee any specific Chinese role in peacekeeping, for example, with relation to these matters.
Okay. I'm glad you cleared that out in some way, Kurt. I was going to get you to talk about maybe something closer to our region, which is, of course, this spat that we're seeing between China and Japan in some ways you could say, a way of China pressuring in testing the U.S.'s sort of and Japan's sort of partnership economic ties as well. I'm just wondering, how do you see this going to be playing out on the global stage, Kurt?
So in this case, one might exact a certain degree of parallel between the Venezuela situation and the Japan situation. So the United States, unhappy with Venezuela, decided to capture the leader and force change through negotiation centered around oil. In the case of Japan, a much stronger country than Venezuela, an ally of the United States, the circumstances are different, but China has chosen, like the United States going to its strengths vis-a-vis Venezuela, China is going to its strengths vis-a-vis Japan in leaning in on economic sanctions to try and change Japanese policy. I think that's going to be unsuccessful. I think that Japan's foreign security policy is quite well established and has been for some time and will not be influenced by Chinese economic pressure. So the question in my mind now is, how far does China push it, and does that lead to just continued stalemate, which is the current situation, or does it lead to an actual Japanese counter-reaction, which could lead then to escalation? The situation, Venezuela is not in a position to escalate back at the United States. Japan is towards China, following the situation very, very closely, and frankly, a bit concerned or wondering what the actual Chinese objectives are in the case of their pressuring of Japan. Do they actually anticipate Japan changing its security policy based upon economic sanctions, which as I said, I think will be unsuccessful? Or what is the actual game at play here?
Kurt, why don't we put that question to Mr. Ding? Ding Yifan, as it pertains to specifically the objectives of China, economic pressure on the Japanese, is there an objective there, or do you think that was simply a response to the comments that came through from the Prime Minister, the Japanese Prime Minister?
Actually, it's a sort of it's not totally a fixed position from China. China is taking some economic measures to try to alert Japanese popular opinion that the current Prime Minister's behavior or a statement about Taiwan, about Asia, is dangerous. To some extent, we should put something together, to link something together. During the Ukrainian war, if you look at what was happening in Europe, is that Germany wanted to take advantage of these crises to become a normal country. Because 80 years after the end of the Second World War, Germany has been in a country that has been deprived of its possibility of military development. Nowadays, Germany wanted to become a normal country with the strongest army of Europe that these German chancellor said, pretend to build up is the strongest army in Europe. So that's clearly a way to take advantage of the crisis and to become a normal country. Same for Japan. Japanese political leaders, especially Prime Minister Takaichi, wanted also to take advantage of the tensions between China and the United States to strengthen Japan's military capabilities and to take advantage of these confrontation between China and the United States over Taiwan issue to become a normal country to some extent, to have a strong army, to have its status as a normal country, just to get out of these defeated country of the Second World War. So that's why China just wanted to launch some warning to the Japanese public opinion, saying that pay attention to what you are doing now. If you wanted to reverse the consequences of the Second World War, and then you will become a revolutionary country, and that revolutionary country will be dangerous for the region.
Yifan, thank you. Ding Yifan there. I want to thank the gentleman, senior fellow at Renmin University of China Institute of Global Governance and Development. Also, our thanks to Kurt Tong, joining as well from the Asia Group. Thank you so much for that conversation. If you're a subscriber and want to watch that interview, you can watch through our TV interactive function, TV Go. You can also become part of the conversation by sending us instant messages. Check it out at TV Go. Some news on China here this morning. China Wanko has until the end of Monday to pitch revised extension proposals to creditors holding two local notes totaling $817 million. Now, the holders previously rejected delaying payments for 12 months, but agreed to extend grace periods. Late last week, sources told Bloomberg the developer was preparing a wider debt restructuring plan, pushing it closer to default. Giga Device Semiconductor says the price of shares for its Hong Kong listing was set at 162 Hong Kong dollars apiece. That is the top of the marketed range and should net around $600 million US dollars. Trading is set to start on Tuesday. And China has issued draft regulations on the collection of personal data from the internet as part of its efforts to safeguard users' rights and promote transparency. The proposal requires apps to clearly disclose practices, obtain informed consent, and limit data usage to essential purposes. The regulation is open for public consultation until February 9th. China has announced its first flight of the Tianma 1000, an unmanned cargo aircraft capable of logistics and emergency response. It's said to be the country's first mid-altitude, low-cost transport platform. State media says the plane can navigate complex highland terrain and execute ultra-short takeoffs and landings.
Right. A look at Asian markets right now. Tech is catching a bid, and we look at beneath the hood, the likes of Meituan, of course, leading the charge today. We're at 1.3% on the Hang Seng Tech Index.
All right, it is many top stories here today, but I think the Iran situation quickly catapulted to front and center. I think we're still watching very closely what happens there. With these ongoing protests, there's a lot of human rights activist groups that talk about hundreds that have been left dead, and certainly that's going to be the situation we're monitoring, and how the U.S. response is going to be on all this as well. But certainly, are we on the brink of some sort of collapse of the Islamic Republic? That's going to be the key question here for the next coming days.
Yeah, regime change is a question mark right now when you look across the commentary that's come through so far, and perhaps a big component of that would be how the U.S. responds to what's going on domestically within Iran. And several updates, not a lot of detail, but the fact that the U.S. president is talking about it, he's getting regular updates. He says Donald Trump says that Iran called to negotiate yesterday, so I imagine this is Sunday. In terms of nuclear, he may meet with Iran, and that apart from that, they are monitoring, obviously, the situation there very close, and he's mulling possible strong options as it pertains to that. But we've pared back a little bit from the extreme scenarios there because he's talking about a meeting and perhaps maybe a diplomatic solution is what I'm reading from that tone.
And what a change, really, what we saw on the ground reported. I mean, there is an internet blackout, I think that started on Thursday, so we're not too clear exactly what is happening on the ground, but up until then, I mean, there was a lot of concerns of this fiscal crisis, right? The collapse in the currency, for example, inflation that's in double digits. This seems to be now escalating much more to now resume change, as you say, and more of a revolution internally. So we have to keep watching that very closely. And what it means for oil flows, of course.
It does. What the market's done with that is initially we did see a little bit of upside. We've since given that back. All things equal, oil hasn't really done a lot. Similar to what we had with Venezuela on a net basis this time last week. It is, of course, a bigger global consequence. What's clear, though, is the preference for alternatives, precious metals, and hedges. That continues to be the case, as you can see on your screens. We'll see you all tomorrow.